Welcome to Investor Speedrun. Today we're breaking down Nike's earnings results, but first I want to go behind the scenes. I started the channel to accomplish two things: create content that I personally would find valuable, and it's a fun way for me to develop with AI. My approach with AI is to have it write the first draft and be the voice of the channel, while my role is to refine the script, focusing on accuracy and content flow. One last note: I want both experienced investors and beginners to find my content useful. So, my plan is to use visuals to help newer investors by defining key terms and highlighting useful information. Let's pass it over to AI Brian for our speed run of Nike's first quarter earnings.
Nike stock is down 7.5% since their earnings call on October 1st, while the S&P 500 is up 1.5%. This drop is unusual for a company Nike's size. What did Wall Street learn that caused it? Uncertainty. Nike created it. Wall Street did not respond favorably. Nike's CFO, the sole executive on the call, announced they are withdrawing full-year guidance as they are replacing their CEO. He also used terms like strategic shift. A comeback of this scale takes time and yet to turn the corner. Making matters worse, all signals point to lower full-year performance than previous guidance suggested. Let's dig into the details. Starting with revenue, Nike reported $11.6 billion in Q1 revenue, a 10% year-over-year decrease, in line with last quarter's guidance. While Nike withdrew their full-year projections, they did signal that annual revenue would be lower than previously thought, which was a 5% decline, and also gave guidance for an 8 to 10% decline next quarter. The lower expectations are attributed to weakness in Nike digital traffic, retail sales trends, and spring order books, plus the expectation of double-digit revenue declines for their lifestyle and Jordan brands. Can Nike mitigate the revenue concerns through margin improvement? On the gross margin, Nike had a good first quarter with a 120 basis point increase. Lower costs and strategic pricing drove this growth. Unfortunately, the positive result is likely to be short-lived. Q2 guidance is a 150 basis point gross margin decrease from last year due to promotional and product mix headwinds. Full-year margins are also expected to decline. This compared to prior guidance of a modest increase. It is unlikely any wins occur on the operating margin front, with plans for flat Q2 operating expenses. Headwinds in revenue and margins sets up for a rough earnings performance as well. Nike reported earnings per share of 70 cents, which is down 26% year over year. The decline is primarily caused by slowed top-line revenue and a higher tax rate. Given our breakdown so far, it is likely that year-over-year earnings decreases will continue. With Nike being a brand-driven company, let's touch on key product and marketing comments. Nike continues to intentionally reduce their classic footwear lines, such as Air Force 1, Air Jordan 1. New footwear products experience double-digit growth. The expectation is that this growth continues. This aligns with last quarter's discussion of an initiative to accelerate product development. Marketing in the Paris Olympics achieved a 60% share of voice, which also resonated with Nike athletes in Gen Z. Time will tell if share of voice translates to financial impact. This earnings call leaves long-term investors with two fundamental questions. Will the changes happening at Nike revive company growth? And if so, how long will these changes take to play out? That's a wrap on Nike's 2025 Q1 earnings call. A link to the call transcript and earnings report are in the video description. Let me know what you want Speed Ran next by posting in the comments. If you enjoyed this video, subscribe. It is helpful motivation to keep creating content. Happy investing and thank you for watching.